Let's start with the Treasury, the fixed income market. Now, analysts expected the T-bill space to close the week on a negative note. Just help us understand what the key drivers of the market were this week.
Yes, Esther. The week really was quiet. Overall, we continue to see the bearish sentiment in the fixed income market. Rates ranging just between 10 and 12%. We continue to see the aversion of the foreign investors, foreign portfolio investors, as they continue to exit the market, basically concerned about the political event that happened earlier in the week. And on the back of that, we saw some actual sell-off in the market. But today, overall, the market was quiet with no major flows experienced.
Now, we're seeing that same flight to safety at the equities market. Today, we saw it falling below 36,000 point mark. And what traders tell us also is that investors are becoming a lot more jittery, especially as things begin to unfold in the political space, making it more, creating more uncertainty. Now, do you see this for the fixed income market? If this trend continues, if investors remain more nervous, what impact do you see this having on yields, the yields trend in the new week?
You're right. The equity market has also reflected what we're seeing in the fixed income space. This year, you can, looking at the market, we know we've seen about 7.1% drop at the all-share index. This, like I said earlier, continues to reflect the activities of the foreign investors. Ours is not as bad, though. Other emerging markets have seen larger outflows. For Nigeria, it's been more of profit-taking and some little capital reversals. We've also noticed a slowdown in the amount of fresh inflows coming into our market. This has, in its own stead, put some pressure on the dollar, on the Naira at the I&E window. We've seen the Naira come under some sort of pressure, going as low as 362.5 and 363 levels, basically.
Do you think that the CBN, at this rate, can still ramp up FX supply at the FX market? We're seeing FX reserves somewhere at around $46 billion and oil prices today just above $71 per barrel. Do you think that the CBN is still in a comfortable position to perhaps not only supply what it usually supplies to the FX market, but top that up just to cushion the effect?
Yes, we're not going to rely solely on the central bank. I could say the sell-off we've seen from May to date has begun to take its toll on the reserves. If you look at the last check, the reserves has dropped to about 46 billion, indicating that the central bank has been doing a lot of work trying to keep the Naira stable. But on the other hand, we still see some flows coming in, CCI-backed flows. We see some hot money still coming in from private investors in Europe and other parts of the world. So although the currency is going to take some more hits in the near term, I do not see that to be like a major sort of concern. The central bank is still fully equipped and should be able to keep the currency relatively stable, even though it's trying to also achieve its convergence, because market players have continued to complain about the multiple rate structure we have, which is not friendly for foreign investors. But we see the central bank doing some work in that light, and we see that convergence coming to a conclusion maybe by the last quarter of the year.
How low do you think the currency could go, and what do you think could be a technical resistance point, if you will, for the Naira?
Like I said, it's too early to give out numbers, but we've not seen anything beyond 363 levels. So if we put in maybe accelerated demand pressure towards the last quarter, we could see maybe 365, coupled with some sort of inflationary pressure that might come, given that we're in an election period and there would be increased spending. So overall, I would price in, I would expect some resistance at 365 at the max.
Okay, let's go back to the treasuries markets now. CBN mopped up some liquidity, some cash from the market yesterday. It offered 450 billion, but was only able to sell 377 billion. And I know that right now system liquidity is tight. Now with that, help us talk to us about how this is going to, trading will play out next week on the one hand, and of course expectations on the bond auction next week.
Okay, next week we have retail, there will be retail refund that would have add some liquidity to the Naira. On the other hand, there's also the usual sale that the central bank has continued to inject, about $210 million. The impact of the retail debits will also be felt in the market next week. We expect about 350 billion to leave the week, to leave the market. Basically, everything is stable. No reason for concern. Okay. The Chinese yuan demand has also been coming in steadily, although given that the sectors that the government prefers, being mostly the agri sector and the raw materials sector, if you look at it, basically most of our demand from China are finished goods. So we've not seen so much demand from that end. Okay. But overall, the FX market should remain stable.
All right, Olawale, thank you so much.
I don't see any break in current range from demand. We've seen an FX at about 352, and most client demands are coming around those levels. Okay,
Olawale, we're going to have to leave it there. Thank you so much for talking to us today. We appreciate your time. Olawale Hamed, FX trader at UBA.